Welcome. Today, we're jumping right into a really interesting company, Ben Kuang Marine, or BKM as we'll call it, and we're going to look at it from an investor's point of view.
That's right. And really, the big question for any investor sizing up BCAM is this company's latest big move a total game changer, a real rebirth, or is it just a super risky bet? That's what we're here to unpack.
Okay, so let's get into the weeds here. BKM has been on this turnaround journey for a few years now, right? Since 2021, their CEO has been shifting them to what you'd call an asset-light, service-focused company. But there's one massive decision they made that is everyone talking. And here it is, the core of the whole debate. They decided to go all in on their subsidiary, a company called Awesome. They bought up the rest of it, the other 49%. So now they own the whole shebang. So you've got two camps, right? One side says this is a transformative, genius move. The other, they're worried it's putting all their eggs in one basket.
So let's talk about this bet, ASM. The bulls, the people who love this deal, they call it BKM's crown jewel. So what is it? Well, you can basically think of ASM as a super specialized maintenance team for those huge offshore oil and gas rigs, the ones that are already operating way out at sea.
And this is where it gets really interesting. What ASOM does isn't optional. It's not a nice to have. We're talking about stuff like fixing cracks and rust, doing mandatory safety inspections that are required by law every few years. They even do repairs while the rig is still pumping oil, which is huge because it prevents crazy expensive shutdowns. This means the big oil companies have to hire them. It creates this constant recurring demand.
Yeah, in investor speak, this is what you call sticky demand. It sticks around. It's funded by the yearly operating budgets of these oil giants, and it's mandated by regulators. So it's supposed to be really resilient, not tied to the crazy boom and bust cycles of the oil industry. But, and there's always a but, isn't there? Even sticky doesn't mean it's invincible.
Okay, so let's follow the money. How does this all translate to the financial picture? Well, if you just look at the numbers on paper, this whole acquisition looks like an absolute home run.
Get this, if BKM had owned all of ASM in fiscal year 2025, their earnings per share, basically the profit they make for each share of stock, would have shot up by a whopping 84%. I mean, that is a massive, instantaneous boost to the bottom line. You just don't see numbers like that very often. Okay, but hold on. That's the pro forma, the what-if scenario. If you look at the most recent actual results, you see a crack in the story. ASOM's revenue, it actually went down. We're talking a 14% decline year over year. Why? Well, they had delays and problems with contracts, especially over in their West Africa operations. Now, the bulls will tell you that was just a one-off hiccup. And if you look at the future projections in this table, you can see why they're sticking to their guns. Just look at the net income line. They're projecting it to more than double from about $5 million in 25 to $12 million in 26, and then jump again to over $18 million in 27. Wow, that's the kind of explosive growth investors dream about.
Right, but those are just projections, and they depend on a lot of things going their way. So let's zoom out a bit. What are the big tailwinds pushing them forward, and what are the headwinds that could hold them back?
So on the plus side, there are definitely some strong forces helping them out. For one, the whole world's fleet of offshore rigs is getting old, which means, you guessed it, more maintenance. Plus, not many new ones are being built. They're also cleverly dipping their toes into the booming offshore wind market, and they've got this new joint venture called Offshore Collective to go out and buy more assets. On top of all that, they're sitting on a nice pile of cash, which gives them a lot of flexibility.
Okay, but here's the elephant in the room, the key risk. It all comes back to the price of oil. The report is pretty clear. If oil prices take a nosedive and stay below $50 a barrel for a long time, well, that puts immense pressure on the oil companies. And even what's considered non-essential upgrade work might get deferred. That would be a direct hit to ASOM's business, no question about it. All right, so with all that in mind, we land on the million-dollar question for any investor, valuation. Is this stock a bargain waiting to be snatched up, or is it a value trap? So let's look at how it's priced. Based on future earnings estimates, BKM has a price-to-earnings ratio, or PE, of about 10. Now, when you compare that to similar companies, they're trading closer to 13. So BKM is cheaper. From a bull's perspective, that looks like a serious discount, a bargain. But
A stock can be cheap for a reason. And the cautious investor would say, hang on a second, this is a smaller company, it's not as easy to trade its stock, and now its entire future pretty much hinges on this one single business unit, ASOM. So maybe that discount isn't a bargain at all. Maybe it's just justified.
Okay, so let's bring it all home. What's the final takeaway here? At the end of the day, BKM is a company that has made a massive strategic pivot. They've pushed all their chips into the center of the table.
So the question you, as a potential investor, have to ask yourself is this. Is BKM's all-in bet on ASOM a brilliant masterstroke that's going to unlock a ton of value and create a recurring revenue machine? Or have they just concentrated all their risk into one basket, making them incredibly vulnerable to the wild swings of the offshore energy industry?
Something to think about for sure. And as always, just a reminder, this content is for informational purposes only. It's meant to be an objective summary, and it is definitely not financial advice.